Good day to all of you. My name is Haruhiro Tsujimoto, President of Capcom. Today I'd like to discuss our management objectives for the medium term and organization building for long-term growth before moving on to our business strategies and plans for the fiscal year ending March 31st, 2020. Management's objective for the medium term has been annual operating income growth, and again this fiscal year, as a result of steadily building up our unit sales and profits in the consumer business, we have achieved both 6 consecutive years of operating income growth, beginning with the 2012 fiscal year, as well as 2 consecutive years of record-high profits. Moreover, net income has grown for 6 consecutive years as well. The average growth rate for operating profit during this period has exceeded 10% each fiscal year. We remain committed to building up our revenue base and growing operating income. I've outlined digital revenue growth during this 6-year period. Net sales were 5.2 billion yen in the 2012 fiscal year, the point at which this consecutive profit growth began, and since the start of this generation of consoles, such as the PlayStation 4, management has focused on digital sales as one of our key themes. In particular, since the launch of Resident Evil 7 in the 2016 fiscal year, we have improved the digital sales ratio of major titles, with high-margin digital sales driving higher results. As a result, our forecast calls for 47.3 billion yen in net sales, 9 times that of the 2012 fiscal year, while we expect to achieve a digital sales ratio of 75%. Next, I would like to discuss building out our organization for long-term growth. My first point is bolstering our talent base. I believe the most important investment that Capcom can make to deliver stable, long-term growth in our business results while polishing our brand is in our development structure. In other words, doing our utmost to further strengthen our R&D talent pool and develop superior creators. This, along with continuing to hire over 100 new graduates annually for 8 years, beginning in April 2012, has resulted in growing our pool of talent by a cumulative 800 people to 2,150 total developers. These young creators have steadily become a significant part of our workforce, contributing to the development of major series, such as Resident Evil and Monster Hunter, and can be said to be a source of our competitive edge going forward. Additionally, we've appointed key people to strategic areas such as esports, while pursuing Capcom-style work reforms for existing employees. These include further utilizing Capcom Juku, our on-site daycare facility, adopting a balanced employee evaluation system, and making improvements to our offices, all with the aim of maintaining high levels of motivation so that our employees can enjoy stable, long-term careers with us. My second point is creating an organization capable of providing the highest quality content throughout the world. We've concentrated development of our major titles domestically to Japan, and on the business side of operations, are improving the efficiency of marketing and PR through a digital shift. Further, in order to focus resources on the Asian market, which has shown exceptional growth, we integrated Japanese and Asian operations last fiscal year. As a way of addressing new opportunities, in April we newly created a section that reports directly to the CEO, which will examine and propose strategies for a variety of new projects. Also, last fiscal year we placed specialists in a newly established subsidiary to handle the promotion of esports as well as Hollywood-related projects. I would like to go over the latest market forecasts. The overall market is expected to continue growing, driven primarily by mobile and consumer games. In 2018, the market reached a size of $146.8 billion, representing a $24.6 billion increase year over year, from $122.2 billion, as well as strong growth above the forecast from the previous year, $137.4 billion. By the year 2023, the market is expected to grow to $201.8 billion, more than 1.3 times its size in 2018. The largest growth is expected to be in the mobile market, with forecasts calling for growth in developing regions such as Asia. Further, the consumer games market is expected to grow 1.6 times compared to its size in 2018, driven primarily by the growth of digital sales. In terms of growth rates, Asia and developing regions will be quite high. We see the continued expansion of the consumer and mobile markets as a significant opportunity for growth. Next, I will discuss our guidance for the 2019 fiscal year. We are aiming to achieve 7 consecutive years of operating income growth, with steady contributions from our digital contents business as a growth driver. Our forecast calls for net sales of 85 billion yen, down 15 billion yen year over year, operating income of 20 billion yen, up 1.8 billion yen year over year, an operating margin of 23.5%, ordinary income of 19.5 billion yen, up 1.3 billion yen year over year, and net income attributable to owners of the parent of 14 billion yen, up 1.4 billion yen year over year. While we expect a decrease in net sales, we are forecasting an increase in profit due to a focus on digital sales in the consumer business and improvements to our amusement equipment business. Our earnings per share forecast is 131.15 yen. Our dividend forecast calls for an interim dividend of 15 yen and a year-end dividend of 20 yen, resulting in a 35 yen dividend for the full fiscal year and a payout ratio of 26.7%. We will focus on further strengthening our major brands while expanding sales of catalog titles in our digital contents business. In consumer, shipments of Monster Hunter World have exceeded 12 million units cumulatively, and we will continue to work to grow these. Also, we plan to further cement the global status of this brand with the September 6th release of Monster Hunter World Iceborne, a massive expansion for the title. We will also focus on further growing catalog sales of Resident Evil 2 and Devil May Cry 5 globally. We aim to both expand our regions and improve revenues earned on the PC platform through strengthening digital sales, and are targeting a digital sales ratio of 75.4% this fiscal year, a significant year-over-year increase. For mobile, we will continue moving our alliance titles and internally developed titles forward toward launch. Now I would like to discuss our unit sales plan for the consumer business. We plan to increase unit sales through growth in digital sales with the upcoming release of Monster Hunter World Iceborne. We plan to release 30 new titles on an SKU basis, totaling 26.3 million in unit sales, with an overseas unit sales ratio of 83.8%, digital unit sales ratio of 82.5%, and catalog unit sales ratio of 54.8%. The number of titles by SKU we plan to release is down year over year because in the previous fiscal year, we released multiple titles that were re-releases for current generation consoles and because of a decrease in the number of distribution titles. Our overseas unit sales ratio is down year over year because of the contribution we expect from Monster Hunter World Iceborne in Japan. Moving ahead, I will go over our forecast for our digital contents business. This fiscal year, despite a decrease in net sales, we forecast another consecutive year of profit growth, driven by a higher digital sales ratio in the consumer business. Our net sales forecast calls for 66.8 billion yen in net sales, down 16.1 billion yen year over year. Broken down by sub-segment, we expect 15.4 billion yen for packaged games, down 20.5 billion yen year over year. 47.3 billion yen for digital download contents, up 6.3 billion yen year over year, bringing the consumer total to 62.7 billion yen, down 14.2 billion yen year over year. In mobile contents, we expect 4.1 billion yen, up 1.8 billion yen year over year. The PC Other segment will be integrated into consumer digital download contents from this year forward, as the distinction between these games is no longer relevant. We are targeting operating income of 24.3 billion yen, up 1 billion yen year over year. We expect the operating margin to be 36.4%. Profit is anticipated to rise despite lower sales because, beginning with Monster Hunter World Iceborne, while a greater focus on digital sales will mean less contributions to net sales, the highly profitable digital format should bring an increase in profit. Also, we expect increased sales in mobile contents due to a certain level of contributions from new releases. Now I would like to discuss the arcade operations business. First is a look at trends in the market for the 2017 fiscal year. Softening of regulations has provided a tailwind for this business, with the market on a recovery trend since 2014. For this fiscal year, we will promote streamlined operations at existing stores while opening new locations. However, in light of market conditions, including the consumption tax increase scheduled for October 2019, we expect an increase in sales but decrease in profit. We aim to create revenue opportunities through a multifaceted approach, including new store formats. We are forecasting a 4% decrease in same-store sales and plan to open 5 new locations, giving us a total of 42 stores. Leveraging our brands, we aim to continue to grow new store formats, such as cafes and merchandise shops. As well, develop the net catcher service begun in the previous year into a new source of revenue. We will also utilize facilities in conjunction with our esports business toward building out the esports market. This fiscal year, we expect net sales of 11.2 billion yen, up 200 million yen year over year, operating income of 700 million yen, a decrease of 300 million yen year over year, and an operating margin of 6.3%. Moving on, I will go over our amusement equipments business. The Pachislo machines market continued to shrink following regulatory changes for model certification. Here is our strategy for the amusement equipments business. We plan to release cabinets that meet current regulations and that utilize popular franchises in pachinko and Pachislo, and aim to improve revenues through restoring our standing in the market. We plan to release 3 models this year, totaling 15,000 units in sales. This fiscal year, we expect net sales of 4 billion yen, up 600 million yen year over year, a return to profitability with operating income of 100 million yen, and an operating margin of 2.5%. Finally, I would like to discuss our other businesses. While continuing to execute on our single content, multiple usage strategy in our other businesses, at the same time we will pursue the expansion of our esports business, which has been an important area of focus since the previous fiscal year. Firstly, we will promote long-term initiatives to grow player segments in esports. We are driving for global expansion and rolled out the Street Fighter League, Pro US in the US in April. Further, we will strengthen our foundation in Japan and plan to launch a number of leagues from early summer, in addition to the already announced Pro Player League, Street Fighter League Pro JP, and community-focused league, Street Fighter League Trial. In character contents, we aim to increase awareness of our major brands by leveraging them in visual media, based on our strategy of single content, multiple usage. This fiscal year, the stage production, Zangeki Sengoku Basara Tensei Hokan, is scheduled to run in Tokyo and Osaka in July 2019. This fiscal year, we expect net sales of 3 billion yen, up 500 million yen year over year, and an operating loss of 400 million yen due to investing in esports development. This ends my presentation. All of us will continue to work together as one to achieve our business objectives this year. Thus, we ask for your continued support. Thank you.